you can read the market structure of a chart properly, half the battle is already won, because you stop guessing and start reacting to what price is actually doing. In this video, I'm going to break down market structure the simple way: highs, lows, and trend. And I'll walk you through it live on the PU Prime web trader. Stick around to the end and I'll show you the market insights section as well, which is honestly one of the reasons I use them as my broker. Let's get into it. Right, so here we are. This is PU Prime web trader. Runs straight in the browser, nothing to install. What I'm going to do, I'm going to pop a chart on for you right now. Right, so we are here and we are on UCAD. Let me open up the chart. Right, I always start with a clean chart, bare candles, no indicators, because market structure isn't drawn by an indicator, it's drawn by price itself. The chart already tells you the story. You've just got to learn how to read it. Right, so market structure boils down to four things. It's quite simple: higher highs, higher lows, lower highs, and lower lows. That's the entire alphabet. A, B, C, D. Easy. Right, so a higher high is exactly what it sounds like. Price makes a peak that's higher than the last peak. That tells me buyers are in control. They've got enough strength to push price above the previous ceiling. This is the high we need to push above. We come down, make a low, and then we make a new high. That pushes above that high. A higher low is the dip in between. Price pulls back, but it doesn't go as low as the previous dip. That's confirmation. Buyers are stepping in earlier. They're not letting price get as cheap as before. So we've broken this high. We've created a higher high, right? We've come down. We haven't broken lower than this low, and then we've broken above that other previous high. And as you can see, this is the dip between the two highs. So here what we have is a higher high and a higher low together. This here is an uptrend. Simple as that. So then we're going to flip it round. We are going to have lower highs and lower lows. And what we have is a downtrend. Sellers in control, every rally getting sold into earlier than the last one. So you have the lower low, comes up, creates a lower high, comes back down again. We have the pullback, doesn't go higher than a lower high, and then it breaks the lower low. Okay, now let me show you how I actually do this on a live chart, right? I work from left to right, making each swing as it forms. I'm not predicting, I'm just labeling what's already happened. If trading feels confusing and inconsistent, maybe you just need a clearer direction. Let me introduce the Signaler.com, a signal service focused on delivering precise, well-structured trade ideas without unnecessary noise. Here's what you can expect: carefully prepared trade setups, exact entry, take profit and stop loss levels, straight to the point market insights, signals built around discipline and risk control. No exaggeration, no overtrading, just calculated opportunities based on analysis. Even better, they provide a 7-day free trial so you can evaluate the signals yourself before making any decision. Stay focused, follow structure, trade with the plan. Try the Signaler.com today. Now, let's continue with the video. So on here, right, this is just really, really clear, right? So we've got a high, high, higher, low, high, high, zoom in a bit, higher, low, high, high, higher, low, high, high, higher, low, high, high, higher, low, high, high, higher, low. Okay, that is an uptrend. I don't need to be clever about it. I don't need an indicator telling me. The structure itself is telling me buyers are in charge, right? And this is the bit most people miss. The trend stays a trend until it doesn't, until price makes a lower low. That uptrend is still alive. That's your invalidation point. So as we're making these higher highs and higher lows up here, comes across there, when we break the structure, this low, high low has been broken, and then the trend is not our friend. It's changed to a downtrend. Lower low, lower high, lower low, lower high. This is the line in the sand. If price breaks below this is a higher low. We go from a higher low to a lower low, right? I know the trend has shifted. That's called a break of structure to the downside, and it's a massive piece of information. Markets don't move in straight lines. They move in waves. Push, pullback, push, pullback. Once you see it, you can't unsee it. Okay, this bit here is the impulse, strong move in the direction of the trend. This bit here is the pullback, slower, and as you can see, choppier against the trend. And then we get another impulse. Bosh, right to the downside. Okay, as traders, what we want to do, we want to enter on the pullback, right? And ride the next impulse down. We don't chase the impulse. That's where most people lose money, buying tops or selling the bottoms, okay? Because it looks strong. Because of this strong move, people get scared and go, oh, I just want to jump in here, right? We want to sell on this pullback, sell on this pullback, sell on this pullback, and ride that impulse move all the way down. Right, one last thing on structure. It works on every time frame. The 4 hour might be in an uptrend, right? Or a downtrend. The 15-minute could be in the pullback phase, and it might look like it's in an uptrend when the 4 hour is in a downtrend. Both are true at the same time. So if I go to the 15-minute here now, okay, well, I might just look on this section, which on the 4 hour is a pullback. Okay, so we're clearly in a downtrend on the 4 hour, and we've got this pullback section on the 4 hour. And if we go to the 15-minute and we try and find that section, which is right here, on the 15-minute, we are bullish. We are making higher highs and higher lows, right? Then we switch, which is the end of the 4 hour pullback, and then we go down into the impulse. Okay, that's why I always start on a higher time frame to find the bias, and then drop down to find an entry. Top down every single time. Right, so this is the bit I really wanted to show you, and honestly, it's one of the reasons I rate PU Prime as a broker. This here is the market insight section, right? It's basically your daily research desk built into the broker. News, technical analysis, calendar, all of it in one place. You don't need to be tabbing out of 10 different websites. What I like is that the analysis here actually lines up with how we just looked at the market. They're talking about structure, key levels, where price is reaching. It's not noise. So if we go here, you got the market impulse, the weekly outlook, and then when we move down, we go onto the economic calendar. So what we've got here is the economic calendar. That's right here too. So before I even pull up a chart, I can see what news is coming, what to avoid, what to watch. So if I just click in here, and it'll bring up what's going on in today's news. For me, having this stuff baked into the platform itself, that's just one less thing to worry about. I can do my analysis and place my trades without ever leaving the tab. So quick recap, market structure is just highs and lows. Higher highs and higher lows is an uptrend. Lower highs and lower lows is a downtrend, and the trend is alive until price proves otherwise by breaking structure. Markets move in impulses and pullbacks. Your job is to wait for the pullback and join the next impulse, not chase the move that's already happened. And when you put it all together on a clean platform like the PU Prime web trader with their market insights doing the heavy lifting on news and analysis, it makes the whole process so much smoother. If this was useful, smash the like button, drop a comment, and I'll see you in the next video.